Hey guys, welcome to Drink Coin. It's Tyler again, and today we're going to be talking about another really good long-term option for you to look out for on your watch list and to potentially put in your portfolio. Like I've been telling you the past few videos, electric vehicles, sustainability, and renewable energy are going to be looking to grow big the next couple of years, especially with the current government in office for the United States. And minimizing damage to the planet has been a big factor for a lot of more developed countries as of the last few years. And so I could see a lot of these long-term options playing off very well over the next couple of years, especially with the transition in office currently in the United States. The stock we're going to be talking about today is Brookfield Renewable Partners. They run under two main different stock things. You've got BEP for if you're in the United States, and BEPC would be their tag if you're in Canada. Right now, these are the kind of different price changes. There's different fluctuations, that kind of thing, for different reasons, obviously, different country economies and everything. But basically what Brookfield Renewable Partners does is they have assets in renewable energy that have to do with like hydroelectric power and solar energy. This allows them to capitalize on a lot of the developments happening in renewable energy and the push for just a more sustainable way of living for all of us here on Earth. Right here, you can see a bit more of the breakdown in North America, what their investments and what they're looking to do are placed in. But essentially, a lot of it's real estate, renewable power, infrastructure, private equity, and credit assets throughout all of North America. As already said, their renewable power assets include hydroelectric, wind, solar, and storage power facilities throughout North America. And especially with it being based in North America, that's a good indication of where the value is going to come for a lot of North American investors, specifically the US and Canada, or people just invested in those markets in general. And even over in Europe and the Middle East, they have things like residential and commercial assets in their portfolios, as well as communication towers and different assets of those natures, where they have expanded just basically all across the world in some capacity. So they're set up to be completely diversified through all of their different dealings that they operate in. Now, recently they had a fourth quarter conference call where they talked about their different returns for the year, and they had about 91% total return in 2020 and an annualized total return of 20% since they've got formed 2 decades ago. They personally believe that they are set to continue growing even more compared to where they are, based on where the renewable energy industry is going and what they are currently dealing with in the industry. They estimate that it's going to be a cost of about $100 trillion over the next 30 years. And this will set Brookfield up pretty well in the sense that they have a lot of assets, obviously, in renewable energy, and any government that is pushing for their country to operate within a more eco-friendly state for the earth are going to be aiding any renewable energy companies, anything that has to do with electric vehicles, anything that's really just looking out for the best interest of the planet as a whole. Recently, within the last couple of months, they did go through a 3-2 split on their stock to make up for just getting potential funding, I would assume, for more of their ventures and everything. The last time, this is the second time they've done a split. The first time they did a split was to create Brookfield Renewable Corporation just in the past summer. And what this has allowed when the stock split happened is the stock price is around $63 and it just dropped a little bit. So for a lot of people that are concerned looking back at the price, that's the reason for that sharp drop from $63 back around November, December area. And what this stock split essentially did for investors is that each share that you owned gave you 1/2 of a share for that share that you own. So say if you had 2 shares, you would get an extra share. If you had something like 200 shares, you would have gotten an extra 100 shares. Obviously, that's going to drop the stock price just a little bit just because of the saturation of the market with the shares, and it's going to dilute the pricing a little bit. So I'm not concerned about the dip that happened around that time frame, especially because they're going to use that money to further their assets and expand their business as a whole, which is only going to be a good outlook for you as an investor long term. What I'm going to be looking for is potentially a very solid increase comparable to what they had last year, where they could be touching early 70s potentially by the end of the year, if not more. And by the year 2025, their value valuation could be above 150, 200, depending on their growth with their assets as a whole. So looking at their stock on an analysis standpoint, this is what I was talking about with that drop off. So you see like it peaked around like that 65 range, 64 range a couple times in here. There was that sharp drop off when they put through that stock split from, this was about 58 when it happened, to that $40 range. And it's already recovered quite a bit from that $40 range going through. And that's just in the last like month and a half, essentially, because this was like mid-December when this happened. I'm only going to be seeing this growing more and more as time goes on. If you look at their long-term chart, just over the period of like 5 years, this is their growth. I mean, they were down to $15 at one point, and then it's just been going up slowly over time. That's what I was saying, why it would be more of a long-term investment, because it is growth over time. But they have been doing a lot more advancements more quickly as of the last year or two. So I do see it ramping up even higher, and the more assets they expand, the more this is just going to go up, especially with governments pushing for that economic responsibility of looking out for the environment, as I was telling you guys about, and what I keep harping on the channel, because that is a very big factor for a lot of these stocks going forward. And as you can see here, I have a very sharp trend line right now that it's riding, especially with those previous highs at the 60s. I can see potentially touching those 60s again by early April or May, potentially, depending on how their trend's growing, especially with it already going up a significant amount in the past just couple months as it's going. You see, this is from the beginning of 2020 roughly until now for 2021. So this is a long-term sharp trend. This isn't even like short-term, like a couple days or a couple months. I'm going to be looking for very significant growth as this goes through, and I'm very optimistic about what they're going to be putting together as a company as a whole. Now that's going to do it for me today, guys. I hope you enjoyed the video and that you have been liking the past few videos I've been putting out. My CCIV stock price estimate for the next year is up on this video, and I kind of go over what Lucid does as a company and what the potential of them and CCIV merging would have on the stock price for CCIV. Be sure to check the description below if you're looking to get connected in a Discord with a community of traders and stockholders and things like that. If you're looking for potential options for your watch lists and things that you might not see on your own, or if you just want a little more technical analysis or help if you're new to trading or anything like that. And I will catch you guys next time, heading over to the next video where I will be analyzing more stocks to look into as you go towards Tuesday. So I'll catch you guys next time. Peace.